Hi, everybody. Welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. Today, I'm going to be talking to the Mercenary Geologist, Mickey Fulp of MercenaryGeologist.com. Mickey, thanks a lot for coming on the show. So you're the Mercenary Geologist. What's that all about?
Well, Mike, most geologists are for hire, and a mercenary is essentially someone that's for hire, and it's usually applied to a mercenary soldier. But I've been a consulting geologist for 23 years now, and I'm essentially for hire. I'll go anywhere in the world to work for the right amount of money.
Now, mainly you focus on mining stocks, the outlook for metals. Tell us a little bit about the outlook right now. I mean, I know that you've been involved in these markets for a long, long time. You must be very impressed with recent price increases. But as a pro, do you look at this and say it's getting a little frothy here?
Absolutely, especially I would say the copper market right now is about as frothy and as risky as you can get.
Based on what? I mean, are the fundamentals saying in copper that the price is just way too high?
Well, I'm kind of a fundamental supply-demand guy. Now, certainly there's a tight market for copper right now, and whether we are in supply deficit or surplus over the next couple of years is basically a flip of the coin. Supplies are tight, but does that really deserve a record price for copper? And I would say no. $4.52 is the latest copper futures price I saw, and I would be comfortable, very comfortable, with a 10 or 20% correction in the copper market right now. And I personally think it's coming now. I said that a month ago, and it hasn't come to pass. I would not want to be long copper. I would not want to be short copper right now. I think it's
on the sidelines.
Yeah, on the sidelines right now.
Are you surprised? Like you've been doing this for a long time. A lot of your clients and the people who you consult for, they're mining companies and people in the trade. Are you surprised by the numbers of individual investors who have woken up to commodities and hard assets now? Do you see that at all ebbing, or is it just continuing to grow?
Well, although I'm probably a short-term bear for some commodities markets right now, I am very much a long-term secular bull. So the retail investor, let's say, is starting to wake up to commodities. But you look at supply and demand fundamentals in emerging market countries and the so-called BRIC countries. Well, I would probably take Russia out of that and stick Indonesia in and call them the big countries. But certainly the long-term demand for commodities is there. And as geologists and engineers, we are not finding and developing enough big mines. So,
but that story, hasn't that story been around for generations? I mean, we've seen these commodity spikes over history, and that same story's been there. We're running out of this stuff. The demand is growing, population is growing, and then guess what? Technologies are developed that allow us to find new material or better ways to extract. I mean, I think natural gas is a clear example of that, where just a few years ago it looked like there was a shortage, and suddenly new processes were developed to extract gas, and now we have an abundance of it. I mean, commodities, haven't they been historically kind of a disappointment for people who want to hold them long term?
Well, I would, your point's well taken, and I would not disagree with that. But I would also say that there are the short-term kind of boom and bust cycles in commodities, and then there's a longer-term secular cycle. And we went through, say, post-World War II into the 70s in a relatively bullish secular market for commodities. Then we went into basically a 25-year low period for commodities.
Right.
I think now we are back into what I would call a secular bull market, driven very much by the emerging market countries. Now, if globalization fails, which it has failed, we had a false start, saying about 1998,
right,
and then we had the Asian contagion, and that knocked the commodities back down. But I really think that we're looking at a long-term secular bull. every Chinese and every Indian right now, rural, has woken up to the fact that they don't have electricity. They want electricity. To build electrical lines, you need a lot of copper.
Now let's talk about, you like uranium. It's one of your favorites. And the prices have nearly doubled in a very short period of time. How would you recommend going about, playing uranium?
Well, I think you want to play uranium stocks. You just can't go out and buy uranium on the spot market and store it in a 55-gallon drum. Well, you probably could, but yellow cake is not going to do you any good. It needs to go to a refinery, be processed to be used as nuclear fuel rods. I would say you would want to play the uranium by playing some of the more advanced explorers and developers in uranium space. And there are certainly new uranium mines. The first new uranium company just went public on the New York Stock Exchange about a month ago. And so I would suggest if you want to play uranium, you play uranium stocks.
Would uranium be at the top of your list as in terms of the most bullish?
Absolutely, at this point. We're building 59 nuclear reactors in the world right now. We've got another 200 that have been permitted and another 200 or 300 proposed. So the demand for uranium is going to be there. And currently, we're not even meeting. We're only mining about 2/3 of the supply we need on a yearly basis.
Sounds bullish. Very bullish.
Absolutely.
All right, Mickey, thanks a lot. That's it for this one, folks. See you next time. This is Mike Norman signing off. Bye-bye.